Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. My first asset was a one-bedroom apartment in Sydney. I bought it in 2010 for $313,000. I still own it. It's doubled in value and after all expenses, it puts a few $1,000s in my pocket every year. See, I'm a long-term investor. I want to generate wealth, not make a few dollars. I'm patient and I plan, which is why I'll win. Emotions don't rule my investment decisions, reason does. I bought a second apartment in Sydney 3 years later. Then another. I still own those too. I had a goal of becoming financially independent by age 40, and from day one, my plan to achieve that goal was to build a large capital base of real estate and hold indefinitely. I mapped everything out to the dollar. Then I began executing my plan. Before I began investing in real estate, I asked many investors about their journey, and importantly, their biggest mistakes. Almost universally, they responded with some version of, "My biggest mistake was selling that property after it doubled or tripled or went up loads in 1 year. Seemed like a good idea at the time, but today it's worth 10 times as much. I should have kept it." These early conversations shaped my thinking and reinforced my belief that investing is a long game. Patience is key, and most importantly, you need to have a plan before you invest. Sure, your plan can evolve and change, but you need to have one. Otherwise, you might do something dumb. As they say, failing to plan is planning to fail. But before you have a plan, you need a goal. You're unlikely to hit a target you're not aiming for, so know what you want. For example, your goal might be, I want to retire by age 40 with $2 million in net assets, or I want to have $100,000 a year in recurring income by 2030. Once you have a goal, work backward from there and figure out what you need to do to get there. What kind of assets? What is your plan? If I didn't have a goal and therefore a plan, I might have gotten excited and sold a property too soon, missing out on substantial capital growth and future cash flow. And that brings me to Tesla. Its recent run has put Tesla stock in the spotlight. The search term Tesla stock literally trended #1 on Google a few days ago. That's kind of insane. Trading volumes are through the roof. It's a feeding frenzy. The finance media can't stop gossiping about the stock. Analysts can't stop talking about the stock. Retail investors can't stop talking about the stock. The result is that loads of new investors have piled into Tesla stock. I'm pretty confident most of them don't have a plan or a goal. So in this video, I'm sharing my investment plan and exit strategy for Tesla stock. Not for you to mimic, I'm in a pretty unique situation, but just to lift the lid on how I think about investing, how I plan my investments, how plans evolve, and my exit strategy. I don't want you to think like me, I just want you to think. I've been following Tesla since the original Roadster, more than a decade. By 2015, my confidence in Tesla's ability to execute their plans had grown enough that I was ready to invest. Problem was, I was busy executing my plan, so I just bought a house in Brisbane and didn't have much in the way of savings. The good news was that the purchase of the house completed my property portfolio. I was done accumulating real estate, and I had another plan. Since I no longer needed a stable income to buy property, I quit my job and started a business. While this was happening, I formulated my Tesla investment plan, and after working my face off for a few months, the revenue began to trickle in, and in early 2016, I bought my first Tesla shares, which was also the first stock I ever owned. At the time, my plan was pretty simple, but at least I had one. Work my face off and use profits to build a stock portfolio and hold for at least a decade, unless a significantly better opportunity presents itself. However, over time, the Tesla story became even more compelling. As I watched the company execute, grow its lead, and operate in a space with literally no competition, as I saw Tesla's success becoming inevitable and realized I didn't know of a better looking opportunity anywhere else, my investment strategy evolved from build a stock portfolio and hold for at least a decade to keep existing assets but go all in on Tesla from this point forward. Don't invest in anything else and hold indefinitely. And this is what I've done. I continued accumulating through 2016, 2017, 2018 and 2019. Today, Tesla stock comprises around 90% of my stock portfolio and I haven't sold a single share. As my conviction has grown, so too has my position. My exit strategy has evolved too. My plan with Tesla stock now is to never need to sell any. Let me explain. In my 20s, I set a goal of achieving financial independence by age 40. Well, it didn't take as long as I thought to solve the money problem, and soon after starting my stock portfolio, I realized I would never need it. My other assets had done the job. I'm a simple man. I don't need much to be happy. I think my experiences with LSD and Vipassana meditation might have something to do with that. Literally all my possessions fit in a backpack. This helped a lot in achieving financial independence early. So my plan had to change. I have a long-term goal of having a positive impact on as many people as I can. This goal drives my daily actions. It's why I made this YouTube channel. It's why I get out of bed every morning. My long-term vision is to accumulate wealth and deploy it towards effective philanthropy. I really want to have a big impact on a lot of people. This has always been the case, but when I realized my stock portfolio wasn't integral to my financial independence, I decided I'd use Tesla stock to fund my philanthropy and my other assets to fund my lifestyle. As it stands today, my plan is to hold Tesla stock until I'm at least 50 years old, another 15 years or more. Then, as needed, slowly sell out of my position to do good in the world. I'm not here to tell you what your plan or exit strategy should be, but I am happy to say it straight. Having a plan is smart. Not having a plan is dumb. And yes, I know I just called a bunch of you dumb. The good news is, you can develop a plan now. Once you dry your tears, that is. Let's imagine two Tesla investors, Sarah and Mark. Sarah has a plan. Mark doesn't. They both buy the stock on the same day for $550. Sarah's plan is to buy and hold for at least a decade. She's done her homework and believes the company is poised to change the world. Mark's plan doesn't exist. Like Sarah, he believes in Tesla, but unlike Sarah, he bought the stock without a plan. Mark believes Tesla will become one of the most valuable companies in the world, but Mark doesn't have a plan. A few days later, Tesla stock has rocketed to $750. Sarah does nothing because she's following her plan. Mark, however, wets his pants and in a whirlwind of adrenaline-filled excitement, sells all his Tesla stock for a whopping 36% profit. I mean, you can't go broke making a profit, so good for Mark. In the following days, Tesla stock runs up to $900. Sarah does nothing. Mark begins to feel sick, knowing that he could have made almost double the profit if he held just a little bit longer before selling. Mark considers buying Tesla stock again, but after paying capital gains taxes, he won't get much for his money. Moments later, Tesla stock falls back to $750. Mark feels like a genius now. He sold at the perfect time. Mark decides he'll wait for Tesla stock to dip back to $550 before buying again. It never does. Meanwhile, Sarah follows her plan, which consists of doing absolutely nothing for a decade. Sarah is a smart investor. She had a plan. Mark is not a smart investor. He didn't have a plan. Don't be Mark. Set a goal, create a plan for its attainment, then execute. There is money to be made trading and investing in the short term. I have no objections to this style of investing. It's just not part of my plan. Do what you want. Just don't be the person in 10 years telling a young investor that your biggest mistake was selling X, Y, or Z, not because you were executing a plan, but because your emotions were driving your decisions. A bad plan is better than no plan. See you in 15 years. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Let me know your thoughts in the comments below. What is your long-term financial goal and your plan to get there? Do you own Tesla stock? What is your Tesla exit strategy, or don't you have one? And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. Either way, the best kind of support is you being here and watching, so thanks again. What the hell? You're still watching? Alright, here's some bonus content. A younger me, executing a plan.
Stephen Ryan might look like a first home buyer, but he's not.
We are looking around the 7 to 750 mark. Rental. Cool.
At the age of just 29, he's already a seasoned investor.
I bought that quite well in a moving market and thought I'd probably be able to go again pretty soon after.